The economics of this project are really stellar. And when you start sensitizing the project economic outputs towards $27 or $28,800, more in line with where the gold price environment is today, we're seeing post-tax NPV at 4.5 times what the capex is. This is a big project. It's 5 million ton a year, the 435 million capex, and 1055 all-in sustaining costs.
Hello and welcome to the Assay TV. I am joined by Brett Richards, who is the CEO and Executive Director of Pasofino Gold. So welcome, it's great to have you with us.
Eleanor, thanks for having me on.
No worries. So we're quite familiar with the company by now, but can you just give us a quick overview of Pasofino Gold for those who are unfamiliar?
Yeah, absolutely. Pasofino is a TSX venture-listed company trading on the symbol VEIN. We have 100% ownership of a project in Liberia called the Dugbe Gold Project. And the project is well advanced. We have 3.9 million ounces in aggregate, 3.3 million ounces of M&I, and an additional 600,000 ounces of inferred. In 2022, there was a feasibility study done on the project that has tremendous economics at $1,600 and $1,700 gold. And as you know, and as everyone knows, we're working in a very different gold price environment today than we were 3 years ago.
Gold prices were set records again today or yesterday. So you mentioned it briefly there, but the Dugbe Project in Liberia is your flagship asset, sorry. So what is the latest at the project and what makes it stand out?
I think there's three things that really kind of make this project stand out. The first one is the jurisdiction. And I've lived and worked in Africa for 25 years and worked in a number of countries: South Africa, Zambia, Congo twice over a 7-year period. And I had built mines in the Congo, Burkina Faso, Mali, and Sierra Leone. And living and working in West Africa, I would say that Liberia is one of the best jurisdictions in West Africa and probably all of Africa, given its strong governance. It's an English-speaking country, and it's pegged to the US dollar, and they have extremely good infrastructure in the country. That's the first point. The second point is really about the project itself. The economics of this project are really stellar. And when you start sensitizing the project economic outputs towards $27 or $28,800, more in line with where the gold price environment is today, we're seeing post-tax NPV at 4.5 times what the capex is. This is a big project. It's 5 million ton a year, the 435 million capex, and 1055 all-in sustaining costs. So when you look at today's environment, we're talking about $2,400 margin to a 200,000 ounce a year production profile for the first 5 years. So significant cash flow generator when we get this built and when we get it into production.
So you just kind of explained it for me there, but you recently advanced the feasibility and technical studies at the project. Can you just maybe elaborate on the takeaways and how they position you for the future development of the project?
Yeah, absolutely. We have an opportunity now to update this feasibility study at not just current gold price environment, but current costing as well, to get this to what I would deem a bankable standard, something we can raise money on. Obviously, we're going to have to raise around $300 million of project financing, coupled with the project equity. But I think the nature of what we need to do is, there's good visibility to getting this into construction. We recently did a gap analysis with MineScope Services out of Perth. They identified, as we already knew, but they identified there's no fatal flaws in the project. But there is some work we need to do to kind of update the study, and that is there will be some drilling to be done, around 11,000 meters of drilling. There will be some met test work that's ongoing right now and that we'll continue to do. And then some trade-off studies on, what suits the process flow sheet best today in this gold price environment. But we're going to keep the same throughput at 5 million ounces, and look to update all of the costing, and then obviously the economic model at the end of it. So that's going to take us about 7 or 8 months, take us into Q1 of next year, and it's going to cost around $6 million US to conduct all of that work.
Okay. So I think I'm right in saying that you just said you need 300 million in financing for the project to scale it. So what is it looking like, and how, what funding strategies or partnerships are you exploring more to reach that?
Yeah, we have a major shareholder, Eleanor. We have a major shareholder called Mansa Resources, and they're the entity that took over Hummingbird Resources PLC back in November of last year. And they're a major shareholder, and they've indicated that they want to assist us in both the financing and in building this project to get exposure to those generous cash flows I talked about. And I think what we're going to see is more of a structured finance approach, where they will come in for some of the equity, they will come in for some of the debt. I will piece together the other portions of project financing kind of late this year and early next year, so that we can jump right into construction with really no delays in announcing the updated feasibility study and filing the NI 43-101, and then moving right into construction.
Okay, exciting times. So let's look at ESG. Obviously, ESG is important for our audience. What is Pasofino doing for ESG with the Dugbe Project's design and development?
Yeah, one of the things I've taken kind of under my wing since I started here in December of last year is really understanding the needs and understanding the requirements of our host communities, and we have 4 of them. And they're all kind of listed in our Mineral Development Agreement, which is a 25-year framework, a law in Liberia that we work with the government on advancing the project, advancing kind of the economic advantages to the country, but also looking at the economic advantages to our host communities. So initially, what we are doing is we will be funding our Community Development Fund throughout the remainder of this year. And we will start to identify projects in each of our host communities that they have prioritized as wanting to do right away. But there's a larger focus here, and the larger focus is to look at creating a large sustainable business for our collective host communities, possibly in the area of timbering and procuring of wood products that will be symbiotic to our project. We will use a lot of them, and excess product can be sold in the free market. So we're in early discussions with our host communities about what that looks like, and of course we will be capitalizing it as part of our ESG commitment to this project. But the long-term advantage is there's carbon offset credits that will apply to our project to make us close to carbon neutral as possible. I even think we can be carbon positive. And then, certainly the sustainability of such a program that will hopefully survive the mine life for many years to come. We have a 14-year mine life, but I fully expect we're going to be able to do some resource development drilling to keep this in play for 20, 25, or 30 years. But this is the type of business we want to set up under our ESG platform to last for a much longer time.
Sounds really great. So then just to wrap up, what can investors be looking out for in the next 6 or 12 months?
I think over the next short period of time, we're going to be updating the market on the activities we're doing on the ground relative to the feasibility study. We'll update the market on our drilling and update the market on our met test work. Again, there's so much extensive work done in the 2022 study. We don't expect any surprises. What we're looking for is optimized results that are going to increase the economics or increase the recoveries or increase the overall output of the mine. So I think we'll be putting that out into the market for the next little while. And coupled with this gold price run we're on right now, everyone running to exposure to gold companies, I think given our economics of so much free cash flow, there is certainly a strong investor thesis here to see Pasofino being easily a $400 or $500 or $600 million company as we approach the finality of construction and get this into more of a cash flow multiple of cash flow valuation versus inventory of gold in the ground valuation. So lots to look forward to, but also lots to keep on the radar as this market starts to move.
Definitely. Thank you so much for joining me again, and we look forward to seeing you again very soon. Thank you.
Thanks, Eleanor. Take care.